Just thinking through this AI revolution that we're maybe starting to witness, and NVIDIA's role in that. It's exciting times ahead.
Yeah, NVIDIA, they announced earnings this week, and of course, beat expectations as well as forward guidance, which is really the language around what they expect to occur coming up. Really surprised the market to the upside. In fact, basically overnight, within minutes of the announcement, their stock price was up huge, 25-30%.
Maybe we should get into, what does NVIDIA do?
Yeah, so NVIDIA they're mainly a chip maker, right? So they make a lot of microchips that go into a lot of devices. And now artificial intelligence, right? There's a lot more demand in the last several years.
That makes me think of Moore's Law, the concept that computing power will double every 2 years or so. Let's talk about where NVIDIA falls within the S&P index, right? So the S&P is a weighted average. There are other big companies. NVIDIA is one of the larger ones, right?
Yeah. So if we look at the S&P 500 index, it's the largest 500 companies in America. NVIDIA is number 4. It's the 4th largest company now. But being the 4th largest company, it's unusual to see the 4th largest company grow by 25% overnight. In fact, a little bit ago, we did the math on that, right, to see, okay, how much did they grow? It was about $200 billion of market value.
So what's a company that's about $200 billion of a market cap?
Yeah, if you look at Pfizer, a little over $200 billion, McDonald's, right? So the amount that NVIDIA grew in that earnings announcement and forward guidance was the equivalent of adding a McDonald's.
Wow.
in moments, right? We'd all say that we'd love to own NVIDIA on a day like today, own more of it. But the reality is, when we kind of zoom out and look at over time, we really want to be a balanced, diversified approach such that we can benefit when the market's going up, but we can also not have any individual single stock creating too much of a drawdown or negative result if it does decline. What we really have to remind ourselves, we think about is, do we need that? Are we looking for that in terms of the volatility that comes along with that? We talked before about stocks, right? They can go up dramatically and they can fall dramatically, right? And the behavior around that and the ability to hold on to those investments at those various times can be very challenging.
Let's go back and look at a few years of NVIDIA's performance. It hasn't always been up only.
Right, yeah. In fact, there was a stretch of time, it was in 2018, in late 18, from October until December of 2018, where the stock price fell 50+% in a 3-month time period. Right, that's a gut-wrenching amount of volatility for investors to hang on to.
Let's talk a little bit more about timing the market versus time in the market.
So time in the market's more important. In fact, what's interesting too is if you look at over the last 20 years, right, and this is the power of market movements and being present on days that are good days. As an example, in the last 20 years, if you missed just the 10 best days in the US stock market as an index investor, your return gets about cut in half from just a buy and hold strategy. These kind of higher growth companies, potentially more volatile, they're really best suited for that long-term segment of a portfolio. That's where we have time on our side to either rebalance around them as they perform, either up or down. And we think of that way, whether it's an individual stock or a broad index strategy, broad index fund, right? There's going to be points in time where we're going to look to rebalance around different segments of a portfolio. The more volatile, kind of higher growth expectation assets should really be positioned longer term in our view.